Hello and welcome. You're watching Traders Next Door. I'm your host Ed Katashabe from Forex Insights SA, and this is the Daily Scoop. On Friday, it was announced that China is going to increase their tariffs on the US from a 84% up to 125%. This is in the latest of retaliatory moves that China has been doing in response to the increase in tariffs that the United States has placed on them. And this is going to have some major implications in this trade war that the United States and China have. The two largest global economies are in with each other. Some experts predict that we are in for a little bit of a roller coaster, which might be hitting a bit of a lull now, but in the near future, in the months and years to come, this roller coaster could get very spicy. Now, it is likely that China is going to come to the negotiation table at some point because the back and forth is getting slightly out of hand, but what ends up being agreed to at that negotiation table is still anyone's guess. In the meantime, it is having some implications on the US economy. Some American companies are likely to see a little bit of increased hostility in their China-based operations. They could face things like tax irregularities and permit problems if a deal does not come in hand. And this is starting to affect global companies such as Apple. Now, Apple has a lot of its manufacturing based in China right now. And if these trade wars continue to play out of hand, it's going to severely impact how Apple is going to do things moving forward. Now, Apple typically only announces price increases on their products when new products come into the market. However, with how volatile things are with these tariffs, we could see the price of Apple products spiking up earlier than normal and higher than what is typically expected. Now, Apple would be looking at what the feasibility of moving some of their manufacturing to the US would be like, but that is going to prove really tricky to do cost effectively. The reason why a lot of these companies have a lot of their manufacturing based in China is it's just way more cost effective to produce these products in China and ship them back to the US. So with this looking less and less feasible with this ongoing trade war, it is going to be very tricky for companies like Apple and the like to move all their operations to the US, or at least to neighboring countries that have a little bit less of a hostile environment going on when it comes to these tariffs. Now, some experts believe there might be a case for Apple to receive a tariff exemption, but the likelihood of this is maybe about 50%, and whether or not it's actually going to happen is anyone's guess at the moment. Now, Apple might take a page from the industries that are in the semiconductor space, such as Nvidia, AMD, and Qualcomm, which have their manufacturing in Taiwan. Apple might look at maybe shifting their operations more there, where they have a little bit more of a favorable trade agreement with the US. However, other trailing edge companies in that same space, such as Texas Instruments and Intel, which have US-based manufacturing, are feeling the pressure of these tariffs right now. With China ramping up its domestic manufacturing, particularly with these trailing edge companies, it's adding a huge layer of complexity to these companies' bottom line. Now, with all these companies bottled together, this is putting a lot of pressure on the US economy overall. And as a result, the White House has put a 90-day pause on all tariff negotiations right now, except for what they have put on China. And they're going to revert back to the baseline 10% tariff that they announced earlier. While China's tariffs, however, are going to remain at a very steep 145%. Now, while this global pause on tariffs is aimed at reducing some of the pressure that is going on right now, we are expected to see as much as a 3% decline in international trade as a result of these negotiations happening in the first place. Now, President Trump has said he's very close to making a deal with 10 or more countries right now when it comes to trade agreements, and ultimately he is looking at making a deal with about 50 other countries all together. But it's left to be seen how these deals are going to look, how they're going to be shaped, and what the long-term implications of them are going to be. The uncertainty right now is bleeding into the markets quite a bit. So it's going to be anyone's guess what's going to happen in the near to long-term future. We're going to have to wait and see that what deals come out. Are the countries going to be happy? Are there more retaliatory measures going to be put in place down the road? Or is it going to be a harmonious solution for the global trade. But right now, the big fish right now is going to be China and what they're going to do, and it is going to affect the markets quite a bit. Volatility has come down in the markets right now since the pause in tariffs, but it is still quite a volatile situation. And with volatile moves comes a lot of money to be made. So if you want to take advantage of the big moves we are seeing right now as a result of these turbulent times, you can go ahead and get yourself a Vault Funder account. Use the code FISA for a 30% discount on all Vault Funder challenges. Go ahead and pass the challenge, get the pips, get the profits, make a bag while the markets have it on offer. You've been watching Traders Next Door. I've been your host, Ed Katashabe from Forex Insights SA, and that was the Daily Scoop.